Welcome to my channel Inevitable I Am, and as you read above, I'm going to expose the whole trading industry to you in just a couple of videos. But before we continue, please grab yourself a notepad, pen, just to make some notes, because this information that I'm going to share with you is super valuable and you're going to need it in the future. But let's skip all the chat and let's get straight into it. So we do have a lot of beginners that's going to join us. So just to give them a basic fundamentals about market structure and how the market moves. So basically the market can only move in three directions. It's upwards, it's downwards, and it's sideways to the right. So basically in trading terms, we call this, if you can have a look at this example here, this is what we call an uptrend because the market moves from a lower low, creates a higher high. After that, it creates a higher low, higher high, higher low, higher high, higher low, higher high. The reason why we call this a higher low, it's because this low is higher than this one. This low is higher than this one. So that's why we call it a higher low. And basically with the downtrend, it's just the inverse of what an uptrend is. So basically it's a higher high, creates a lower low, higher low, lower low, higher low, then a lower low, because this low is lower than that low. And then you get the side trend. We call it in trading terms a consolidation. This is when the market doesn't create new highs, it doesn't create new lows. It just stays in this range between the higher high and the higher lows. And yeah, basically this is quite simple, easy to understand. Grab your notepad, make yourself some notes, because this is really the fundamentals and the basics of trading. This is how the market will move, always. And basically, just to give you an example of market structure, this we have here, as you can see, this is an uptrend. This is the consolidation. This is the downtrend. Now, markets, they never move always up. They never go always down. There's a point in the market where the buyers get tired, where the sellers get tired and they give up. So now they give the market to the buyers or they give the market to the sellers. And that's basically what happened here. So basically the buyers stepped into the market right here. They bought, sellers sold, they bought, and now they got a little bit tired. Just to keep it simple for you. And now this structure here, this is resistance. So the sellers refuse to let the market go higher than 1,348. The sellers refuse to go to pay higher, to pay a higher price than that. So now right here, the seller stepped into the market, the buyer stepped in, the seller said, hey, I'm not going to pay more than this. So now the seller stepped in, buyer stepped in, the seller stepped in, the buyer stepped in. So now what happened here? The buyers got pushed back, and the buyers weren't even at the resistance. They weren't even at that price. So now that gives me like confidence. That gives me to say, hey, the sellers are going to take over this market now. What happened? Booms. It dropped down. So this, I know that it's because the market create a new. So this is, say this is the higher high. This is the higher low. This is the range. So now it came down and it broke the higher low. It broke the higher low, and now this is the lower low, and this would be the higher low. Lower low, higher low. lower low, higher low. So as you can see, it completely shifted from an uptrend to a downtrend. From an uptrend to a downtrend. And yes, basically, where do you fit in the picture if you want to take a trade? Now, as you can see here, the price always needs to retest. The price always needs to retest the resistance or the support levels before it can break through or before it can continue. So basically, nice market structure in a perfect world, it would look like this. So what I'm currently doing, it's an uptrend, and now there's levels. So let's put the level right here. This now is in a perfect world. So basically, this is where you can potentially take trades. This is where you can potentially take your trades. This is a higher low, higher high. So now it pushed up. It pushed up to create a new higher high. Now after the higher high in an uptrend, what comes next? A higher low. After a higher high, there needs to be a higher low for the market to be able to continue to create a new higher high. So this is basically what happens. This is your higher high. Higher high. Guys, sorry about my screen. Let me just, yeah. Higher high. Higher low. Higher low. Higher low. And your higher low. Move. So every time you can start to take trades whenever the higher high is being tested, and it creates a new higher low. Easy, right? And that's how you can make money. Easy, easy peasy. And that's why I'm here, to expose the trading industry to you. But it's not just gonna be easy like this. So now, as you can see, you made nice money. Yeah. So now what can happen is the market can now, yeah, retest, retest, retest. And then a last one will be right there, and kabooms, 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 kabooms. So basically now what happens, the market is sideways. So every time you know the market goes to the higher low, you know you want to buy, right? But now say you entered a buy right over on the side. Oopsie. What happened to you? On this side. What happened to you? The market went straight down. Now, as soon as that happens, you know that the trend is about to end. So now what you do? You wait. You wait for retracement up until this section. But you can't enter there yet because that can be a fake out. That's why you need to look at the candlesticks, and the candlestick patterns will show you what the market is about to do next. So right here, you see Asia, market is going down. Now right here, the market is retesting this area. This lower low, the market is retesting. What can happen here? You can take selling opportunities right there up until this area. The market then goes down again, It needs to retrace again. Then you have another selling opportunity right there. Then you can take a trade right here again, because we always want to trade with the trend. We never want to trade against the trend, because otherwise you're gonna lose a whole lot of money. So as you can see, nice 1, 2, 3, poof, you got stopped out. 1, 2. So in 1, 2, 3, 4, 5, 6, in 6 trades you only lost 1. So that's awesome. That's awesome. But this is all in a perfect world, in a perfect market structure. So now I hope that you made some notes. I hope you understand this concept. This is quite easy to understand. So now let's go a little bit deeper. Let's go into the real markets, because the markets, it never looks like this. So we have Apple over here, but let's do Euro USD. I don't think I have any analysis there or something. I hope not. Okay, good. So now I like to do top-down analysis. So this is for the beginner traders. I like to do my top-down analysis from daily time frame. As you can see, what kind of market is this? So here we have your higher high. This would be your higher low. It's your lower low. So this would be your higher low. This would be your lower low. And right here, this would be your higher low. Okay, so just follow me from higher high to higher low, lower low, higher high. So what can you see? If I take this one, it's clearly a downtrend. So now you know, I'm just gonna make a note now, because this is my routine whenever I'm looking to get some nice trades. So now I say to myself, on the daily time frame, the market is bearish. Daily market is bearish. You go to your 4-hour time frame. You know the market is bearish. So now just don't go this way. This is now irrelevant. You only want to look at current price action and your screen over on this side. So now you can see Asia. This is the higher low. So now I'm gonna make a right there. Let me extend it just so that you can know. So this is the higher low, okay? And this would be my lower low. Right here. Yeah, this would be my lower low. So because the market is bearish, we know this is higher high, it travels to the higher low, and now it's gonna push back. It needs to go down like this. So now what are we looking for? We are looking for the market to be done with the retracement. So this is the lower low right here, and this would be my new higher low. No? So now after that, what happens? We know the market is done with the higher low. It created the lower low. It's done with the higher low. Up next, of course, we do have a lower low that needs to be created somewhere. We don't know where that is, but the lower low needs to be created because this is a downtrend. So now we can see that the market, okay, clear indication that this would be a downtrend. This would be my lower low. So I'm just basically gonna explain to you the higher lows and the higher highs, just to keep things simple. Just to keep things simple, and I hope that you are still following, that you're making notes. So this would be my lower low. Just leave this area. This would be my let's see. This would be my higher high. This would be my higher low. This would be my higher high. This would be my higher low. This would be my higher high. And now what happened? The market, it broke the higher low right there. Market, it broke the higher low, and what happened? So as soon as the market, it broke the higher low by this candlestick right here, what happened? The market came down and it retested the higher low. So if you remember, like 5 minutes ago, what did I tell you? The market needs to break the higher low. Once it breaks the higher low, it needs to retest the higher low, and then you can put in a trade right over on this side, right over here. Your stop loss would have been right there, the higher high, because now if the market, it retest, but now it broke through the higher low and it broke through this one here, through this candle, that would have meant that this would be all a fake out. So now, as you can see, you would have been already in nice profits. Okay, but that's not why I'm giving you the lesson now to take trades. I just want you to understand the market structure. So now from this area, the market needs to break this one here. The market needs to break the lower low, and as soon, just like here, like on this side, market breaks the higher low, that means that the uptrend is done. The uptrend is done. The buyers are tired. Now the market, it breaks the higher low. It creates a new lower low. Lower low. There would be your new lower high, higher low. And now the market is going to move like this. Booms. 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 It's going to do that the whole time. Whole time now. Up until it reached this area right here. And here you can take trades right here. Right there. See, retested right there. But yeah, I hope you understand the concept of how markets move. To give you another example, let's go to